We're in the midst of retail earnings and we're getting some mixed results. What's your thoughts on earnings so far?
Well, it kind of confirms the stock pickers market, right? I mean, because you have some good reports, like a TJ. I thought Target was actually pretty decent. And then you have some real disappointments, like a Fossil, like an Abercrombie. So, I think that what we try and do is we try and focus on where are the trends. Everyone's been focusing on the low end and the high end. And somewhere in the middle, TJ fits into the middle, right? That it has and offers all kinds of products and good quality, but in an environment where the consumer is a little stretched because of higher oil prices and lower income growth, it kind of makes sense to buy that kind of a name. So this one also is doing a restructuring in Canada and Europe, and I think so while it had a great move earlier this week, it's one we would buy. Target is one that we would take a look at certainly as well, because they've already done the restructuring and they're focusing on a lot of different growth initiatives, and I think they are taking shares, from some of their competitors.
Just on TJ, they have that exposure in Europe and they've been doing well there, but does that concern you?
Isn't it amazing that they did a 13% comp in Europe? I mean, I had to take a double take on that. But the reason why, I know it doesn't concern me as much. I mean, I certainly have to keep an eye on it, but it's 11% of their revenues. There's no other competition, off-price retailer in Europe from North America. So I think they really have a chance to gain a lot of market share before anyone gets in. And more importantly, or most importantly, they have a new management kind of team. They've been there for a while, but they just gave more to this one person who has an excellent track record of restructuring and of execution. And I think the restructuring is going to continue to work, and that will be the tailwind that offsets maybe the weaker consumer over there.
And now what about Ralph Lauren? That's one you just recently got out of. They have a much bigger exposure to Europe.
Yeah, it's 20% is Europe, and obviously it was a bad call. We got to take our lumps when it is. So the reality is we thought that at the time that we bought it, we thought that Europe was slow but not decelerating. And in April and in May, you've seen a big deterioration there from a number of companies. And Fossil certainly scared us, but I mean even someone like a Cisco, or a Priceline. These are good companies, high quality companies that indicated that there was a deceleration. And so rather than wait and have to buy this at the 140 level or below, we took our lumps, we took our losses, and you know what? We could take a look at it longer term. Maybe if it does fall, we might buy it back. The story long term makes sense to us.
How about JCPenney? A huge miss there. A lot of people were surprised by this. Stock has been down big right after the report. What do you think about it?
So overloved, so overowned. Everyone just
Ron Johnson factor.
Of course, and you know what? No, I mean the reason why we didn't get involved really was because of what Kohl's is doing. Kohl's scared me in a way because they have these aggressive price changes that they've been making, and they can't even get the numbers to work, right? Let alone someone like a JCPenney, which has to really reorganize and restructure. Now I have no doubt that Ron Johnson will be able to execute the plan, but I just think it'll take a longer time frame. And so I'd rather be in again some of the names that we just talked about, which have kind of less issues and more growth.
This market is
stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to